So we identified a continuation head and shoulders pattern in dollar yen yesterday. And based on that, we initiated some positions in dollar yen where we bought $100,000 yen at 112.72. We placed a stop loss at 111.50 with the logic that if the prices move below the neckline, then that would be a failed continuation head and shoulders pattern. So we see that the orders that we also left in dollar yen were not triggered. Now if you go to pending trades, you see that the buy at 112.10 with a stop loss at 111.30 was not triggered, so dollar yen did not retrace. However, we see that dollar yen is now at 113.24.25, and you can decide if you've made a decent enough profit on this trade, if you wish to exit, and then re-enter on retracements towards the neckline, which we saw yesterday was roughly at 112. Now we need to fine-tune these prices and these entry points with much better charting tools, which we shall look at how to later on. But for now, since we're trying to understand the concepts behind patterns, and next we'll understand concepts behind indicators. But these are tools that help us trade in the markets, be it dollar yen, be it sterling, or stocks, commodities, any instrument. The concepts are the same. Let's assume that think we've made enough money here. We think that the market in dollar yen is stalling at 113.24.25. Let's go again and look at the charts to see where we can find some resistance. We see that around 109.13 or 114, there seems to be strong resistance. The support seems to be here at 111.82. Now let's assume that after a lot of thinking and studying and analysis, we've decided that the dollar yen, that the momentum, the breakout, doesn't seem to be backed by a rapid price action. Let's see what the closing yesterday was. So we see that the closing, if these prices are correct, we see that the closing was much lower than the high of the day. So the high of the day was 113.23.24 and the low was at 112.26. So let's say as a trader, in your opinion, you feel that dollar yen from here, from 113.20, will move down back to 112 to test the neckline support. As a trader, I'd like to exit my dollar yen position. So I take this trade which says close open position, enter the trade details of the opposing trade into the trade center that will close out this. So let's try this. So this is my original trade, which was the original trade was a buy at 112.72, and I wish to square this off. So it's a sell now. The order type is market. I'm not going to place a limit or a stop loss order, which we shall see later on when we look at money management for trading stops. So I wish to sell at the current market. I just submit. If you look at closed trades, they've closed all the trades. So they've closed 80,000. They've closed the previous trades. I had entered at 103.74 and 105.01. And 80,000 of the current trade, the most recent trade. So we've realized a profit of roughly $2,000. And the current net profit loss is 2000 minus 400, roughly 1600. So we've got the sterling shorts still open, of which one is in a loss, the other one's a profit. We've got $20,000 yen remaining of the $100,000 which we initiated yesterday. Now that's not exactly what we wanted. We wanted to keep the other two open and demonstrate some trailing stops. And nevertheless, we'll close out all the positions and initiate more positions at lower levels. So let's close this out also. We submit this. We are left with the sterling positions. We need to somehow reduce our losses here. We'll check the sterling charts, maybe initiate some more shorts and then average them out and reduce the losses here. I can't remember why these trades occurred. This is why we need to enter all our trades in the foreign exchange blotter, where we put down the reasons for entering the trade and exiting the trades. So let's do that. So let's write the transaction ID, we write the currency. We initiated $100,000 at 112.72 for maturity spot, which would have been, so that's in yen, 52,000 yen. We had a stop loss at 112.10. Anyway, you can enter these kind of details in the dealer pad so that you know later on. So you jot down the reasons why you initiated a position and the reasons why you exited the trade. We go back to dollar yen. We know that we've exited the trade because we wish to take profit. We want to initiate the trade again because we want to continue to buy on retracements towards the neckline. So we look at initiating dollar yen at 112 point. Let's say the neckline was at 112.10, but we wish to initiate at slightly higher than that, so maybe 35, 100,000, and the exit condition would be stop loss at 50. Take profit. Let's assume that we feel 113.25 should be enough. Again, on the upside, it should limit the upside. But there is no real need for a take profit because we've seen that theoretically the head and shoulders continuation pattern, the minimum target should be the distance between the neckline and the head top. So let's not leave a take profit. Let's submit that. So we have one more order. We go back to our dealer pad and we put this order maybe somewhere here as orders, since these have not been initiated and don't affect our position. We write these orders down here in the dealer pad, and that's how we initiate our trades and continue to analyze the markets looking at what the US has done, looking at what Japan's doing, what London, the price action in London, the price action in the US, and the price action in the Asian markets. Next, we look at indicators such as volumes, moving averages, stochastics, the RSI, many more tools to help us decide where to initiate positions, whether to buy or sell. We will also look at money management to help us decide when to take profit, where to leave our stops. A couple of points we'd like to highlight before we wrap up the section on patterns is, one is that the rates we saw on Yahoo Finance for the 3rd of July, the closing of the day was not lower than the high. The closing of the day was close to the high of the day at 113.34 as per the daily FX charts. So we need to be careful of the prices that are shown on some charts. We need to have a reliable system. We need to know that we can trust the prices, that we can trust the information given to us from these websites. That's one. The second one is that we did not consider that the 4th of July was a US holiday. We need to be aware of the holidays in the currencies that we are trading. The third point is that we also need better systems. There are plenty of tools available online that you can use to chart your currencies or stocks. Some of them are free, some of them are paid, but I think most of them would be free. We'll look at these charting platforms in more detail, since when we study indicators next, we need to have a much better charting system and a charting system that has all these indicators available for us to use. So that brings us to the end of patterns in technical analysis. And next we look at indicators that we can use as tools to help us chart.